A hood cleaning business that pays you $150,000 a year isn't worth $150,000. It's worth $375,000 to $450,000 as a sellable asset. Most service business owners think in monthly income, not asset value. That single mental mistake cost them 6 figures when they finally sell. This video reveals the exact math brokers use to value hood cleaning businesses at exit. By the end, you'll know the number you should be building toward from day one. Here's what changes when you stop thinking like an employee and start thinking like an asset builder. Most people start a service business to replace a salary. They calculate monthly bills, add them up on a spreadsheet, and aim for that number. But a business isn't just a paycheck you collect twice a month. It's a thing you can sell, like a house or a rental property. Hood cleaning is especially valuable because it's not optional. Fire marshals require it. Restaurant owners can't skip it without risking shutdowns and fines. That compliance requirement makes it worth more than almost any other cleaning business on the market. So how do buyers actually calculate what your business is worth? The formula is simpler than you think, and the numbers are better than most service businesses. Businesses sell for a multiple of owner earnings, also called EBITDA or seller's discretionary earnings. Owner earnings equals revenue minus all expenses, plus back your salary and any personal expenses you run through the business. Service businesses typically sell for 2.0 to 4.0 times that number. Hood cleaning sits at the higher end, 2.5 to 3.5 times, because of compliance-driven demand. Quick example, $150,000 in owner earnings times a 2.5 multiple equals $375,000 sale price. That's the asset you're building while you collect monthly checks. But not all hood cleaning businesses get that multiple. Some sell for half that, others sell for more. Here's what separates them. This is the secret advantage most hood cleaning owners don't realize they have. Hood cleaning commands 30 to 50% higher multiples than standard commercial cleaning. Why? Because it's legally required, not a preference. Restaurants can't skip hood cleaning without risking shutdowns and fines from the fire marshal. Buyers pay premiums for must-have services over nice-to-have ones. A pressure washing business with the same revenue sells for less because customers can delay or skip it when budgets tighten. Your compliance mode is worth real money at exit. That fire code sticker on every hood you service translates directly to dollars in your bank account when you sell. But there's one thing that makes your business even more valuable to a buyer. If 60% or more of your revenue comes from recurring contracts, add $75,000 to your exit price. Businesses with recurring monthly or quarterly contracts sell for 0.5 to 1.0 multiple points higher. Why? Predictable revenue equals lower buyer risk. Job-by-job operators force the new owner to resell every month. Contracted revenue transfers automatically. Same business at 3.0 times equals $450,000. That's a $75,000 difference. One strategic shift, converting customers to contracts, can add 6 figures to your exit. Here's the penalty that kills valuations. If you're still the one climbing ladders, your business is worth 40 to 60% less. Buyers don't want to buy themselves a physically demanding job. If the owner does 40% or more of the cleaning work, the business becomes unsellable to most buyers. And they're not paying $400,000 to scrub hoods in a hot kitchen at midnight. They're paying for a system that runs without them. Systematized crews, documented processes, and operational independence multiply your value. The work you do to remove yourself from daily operations isn't just lifestyle improvement, it's tens of thousands of dollars at exit. Every hour you spend training a crew member, instead of holding the pressure wand yourself, is equity you're building. And here's what proves the business can run without you. Your inspection records and compliance certificates aren't just paperwork. They're worth $50,000 or more at sale time. Businesses with digital inspection records, compliance certificates, and automated customer communication sell 25 to 35% faster. Why? Because they prove operational transferability. A buyer can see exactly what gets done, when and how. It de-risks the purchase. They know the system works. Poor documentation makes buyers nervous, and nervous buyers lowball or walk away. Your CRM, your checklist, your photo records of every hood before and after cleaning, that's all sale value. The 3-ring binder with laminated procedures sitting in your truck is worth more than most operators realize. Here's the good news about your market position. Your small hood cleaning business is actually in the market's sweet spot. Businesses selling for $300,000 to $800,000 have 5 to 7 times more qualified buyers than $1 million plus businesses. Why? SBA loans cover up to $5 million, but most buyers qualify for $300,000 to $800,000. More buyers equals more competition equals higher prices. Your mid-sized operation isn't a disadvantage. It's exactly what the buyer pool wants. You're not too small to sell well. You're perfectly sized for maximum buyer interest. The buyer, who just cashed out of a corporate job with $400,000 in their 401k, is looking at businesses exactly like yours. But timing matters more than most people realize. Most service business owners wait 12 to 15 years to sell. That's about 7 years too late. Valuation multiples peak at years 5 to 7 when growth curves are still strong. After its year 10, owner burnout shows in the numbers. Revenue flattens, systems decay. Buyers can see it in your P&L statements, and they discount accordingly. Waiting until you're exhausted means selling at the worst possible time. Knowing your exit number from day one means you can engineer the business to sell at peak value, not desperation. The operator who plans their exit in year 1 walks away with a check double the size of the operator who decides to sell after burning out in year 13. So what's the actual number you should be building toward? Here's the math that changes how you think about every decision in your business. A hood cleaning business earning $150,000 in owner profit at a 2.5 times multiple equals a $375,000 asset at 3.0 times, achievable with contracts and systems, equals $450,000. Every dollar you add to annual profit adds $2.50 to $3 to your sale price. That operations hire you've been delaying doesn't just free your time. It adds $50,000 to your exit. That contract conversion strategy, another $75,000. You're not just running a business, you're building a 6-figure asset that will hand you a check larger than most people's retirement accounts. So if you're building this business, here's what you do with this information. Now that you know the exit math, here's how to build backward from it. Step 1, calculate your current owner earnings, revenue minus expenses. Add back your salary. Step 2, multiply by 2.5 to get your baseline asset value today. Step 3, identify which of the 7 factors you're missing. Contracts, systems, documentation. Step 4, prioritize the changes that add the most multiple points. The business decisions you make this year determine the asset value you walk away with in 5 years. Every contract you sign, every process you document, every crew member you train is another brick in the asset you're building. And if you want to see what this looks like in practice, if this changed how you think about your business, hit the like button. It tells YouTube to show this to other operators who need to see it. Subscribe if you want more videos breaking down the real numbers behind service business growth and exits. Drop a comment and tell me, what's one change you're making after watching this? Most people build a business to pay their bills. Smart operators build a business to sell. The difference is $250,000 in your bank account when you're ready to walk away. Build backward from the exit. That's how you win.